Very good evening, everyone. How are you all? Everyone fine? Super. Very good. Okay, I am also doing great. First, let me know is video, audio, everything is okay or not? Last class we completed India's 33 and today we are going to start India's 7. And last class we have also completed India's 24. That is related party disclosure. I have given one question as homework. I hope you have done that. If any doubt, you can ask me right now. I hope you have referred my class note, and after referring class note, I don't think so you have any doubt. Okay. So is video, audio, everything is okay or not, so that we can start today's class? Okay, very good. So today we are going to start India's 7 cash flow statement. Cash flow statement, normally a question may or may not be asked, but whenever they ask, it is a question of what? In descriptive part, I am saying it can be a question of 6 to 8 marks. Last to last attempt, that one question was already asked in exam. Normally we feel that a question of MCQ nature can be asked from this particular topic. Now cash flow statement means what? What do you mean by cash flow? Cash flow means inflow and outflow from cash and cash equivalent from three activities: operating, investing and financing activities. What is operating activities? Any principal revenue producing activities are what? It will be operating activities. Any principal revenue producing activity. You know about revenue. Any income from ordinary activities are what? Revenue. So any principal revenue producing activities will be what? Operating activities. Investing means what? Acquisition and disposal of long-term asset as well as investment other than cash and cash equivalent. Other than cash equivalent, you can say. So acquisition, disposal, long-term asset. Long-term asset means PP, intangible asset, investment property, and investment other than cash equivalent. Then financing activities are activities that changes the composition of equity and borrowing of the entity. So any activity which can change the composition of equity and borrowing. When I say borrowing, it is short-term borrowing as well as long-term borrowing of the entity. I think in this, no doubt, operating, investing, financing, for reference, you can read this question 2, 3, 4. Lot of examples are given, which will give you more clarification about all these activities. So what is the meaning of cash and cash equivalent? Cash include cash in hand, including foreign currency, and also any demand deposit with bank. Demand deposit is current account. If you have any bank balance in current account, that will be what? Your cash. I am saying cash. Right now we are not discussing cash equivalent. So can I say cash means cash in hand and cash at bank in current account? But can I say current account may have what? Debit balance. It may have credit balance also. If credit balance, so we call it bank overdraft. Now the question is that bank overdraft, whether it is a cash and cash equivalent or it is a current liability. So in balance sheet, as per definition of Ind AS 1, it will be shown under current liability. Means as per balance sheet is concerned, any payment, which any amount which is payable on demand is always a current liability. So as per balance sheet, because balance sheet is as per Ind AS 1. So in balance sheet, this bank overdraft will be shown as current liability. But Ind AS 7 has given one clarification that this demand deposit with the bank, if it has credit balance, so this bank overdraft will be shown as a part of cash and cash equivalent. Means it will be deducted to calculate cash and cash equivalent for the purpose of Ind AS 7. For the purpose of Ind AS 7. So bank overdraft which are repayable on demand are part of cash and cash equivalent. However, any bank overdraft facility, any cash credit which are not repayable on demand are considered as financing activities. So there are two types of bank overdraft. any bank overdraft which are payable on demand. In balance it is current liability, but in cash flow statement it will be shown as a part of cash and cash equivalent and reduced from cash and cash equivalent. But if it is not payable on demand, in balance it will be current liability, but in cash flow statement it will be a financing activity. This is important. Whenever question is silent about bank overdraft, we will assume in this chapter we'll assume it is cash and cash equivalent, and we reduce from cash and cash equivalent to find out cash and cash equivalent for the purpose of this chapter. For the purpose of this chapter. Understood? Now what is the meaning of cash equivalent? Cash equivalent means short term. Short term. Highly liquid investment means it is an investment which are short term highly liquid. Short term highly liquid investment that are readily convertible into known amount of cash means amount of conversion is known to us, which are readily convertible to the known amount of cash, which are subject to insignificant risk of changes in value. If all these three conditions are satisfied, then it will be a cash equivalent. Means any investment will become cash equivalent, which is short term highly liquid investment which are readily convertible to the known amount of cash, which are subject to insignificant risk in the changes in value. Now the question is, what is short term? So first short term one clarification has been given. Short term here means 3 months or less than 3 months from a date of acquisition. The best example for this, any FD which has a maturity period of 3 months or less than 3 months from date of acquisition will be what? Cash and cash equivalent. But if any FD which have a maturity period of more than 3 months, that is not cash equivalent, that will be considered investment in this chapter. That will become investing activities. Similarly, any investment redeemable preference shares, any investment in redeemable preference shares which are redeemable within 3 months from the date of acquisition, can I say it will also meet the definition of cash equivalent? Because can I say it will be short term highly liquid and which is that can be readily convertible in known amount because redemption value will be known, and which is not subject to high risk. Got this point? But any investment equity shares which are realizable after within 3 months from date of acquisition cannot be cash equivalent because it is subject to high risk, and therefore it will be an investing activities. I hope this much you understood. However, you can refer question number 1 where more example about cash and cash equivalent is given. Understood? One thing we have understood, cash flow statement is a statement of movement of cash and cash equivalent under operating activities, investing activities and financing activities. When we say investing activities and financing activities, then we always use direct method to find out cash flow from investing, cash flow from financing activities. Direct method means what? Cash inflow minus cash outflow, cash inflow minus cash outflow. But for operating activities, Ind AS 7 has given two methods as you have done in your CA inter. So direct method and indirect method. Direct method, once again, it is cash inflow minus cash outflow. But indirect method means we need to adjust PBT and we convert profit before tax from SOPL to cash flow from operating activities. So this is more interesting. Indirect method is more interesting. Okay, sir. Format of cash flow statement is very easy. First we write down cash flow from operating activities, then cash flow from investing activities, then cash flow from financing activities. This will be net changes in net changes means increase or decrease in cash and cash equivalent during the year. Then we'll add opening cash and cash equivalent. Then the resultant amount will be closing cash and cash equivalent. Super easy. I think in this no doubt. Chalega? Yes, sir. Now cash flow from operating activities. When I say using direct method, then the very easy. Direct method everyone know. Means we need to find out what is cash inflow from operating activities, which may consist of cash received from customer of goods and services. It may include cash sales, collection from debtor, or any cash received from royalty income, commission income, or any other operating income. This will be what? Total gross received. Then we find a gross payment, which may be gross payment to supplier of goods and services, which may include cash purchase, payment to creditor, then cash payment to employee, then cash payment for any other operating expense. This will be what? Cash generated, means the plus and minus will be cash generated from operation. From this we separately deduct income tax paid, and then this amount will be net cash flow from operating activities. I think in direct method you don't have any doubt. Direct method is simple. Now coming to indirect method normally at CA final level they should ask indirect method only. Okay, now we'll start always from PBT, profit before tax, from SOPL. SOPL will start from PBT. Just try to understand, if they have given PAT, so we can add tax expense, whatever has been debited to PL, then we can find out PBT. Yes or no? So if they have given profit after tax, we'll add tax expense, whatever has been charged to PL account. Now tax expense, current tax plus minus deferred tax. That you know. I hope you're understanding. So profit after tax plus tax expense will be PBT, but we start always from PBT. We'll start from PBT. Then we'll do adjustment for two items. What are the two adjustment required? One is adjustment for non-cash item, then adjustment for non-operating item. So all the non-cash item will be eliminated. All the non-operating item will be eliminated. Now can you give me some example for non-cash item? Okay, depreciation, amortization, impairment loss, provision, reversal of provision. These are all are examples of what? Non-cash item. So non-cash item will be eliminated. Can you see, if I am saying non-cash expenses, so that will be added. Non-cash income will be deducted. Non-cash income will be deducted. Similarly, non-operating item will be also eliminated. What do you mean by non-operating item? Any item is related to financing or investing activity, that is non-operating item, that will be also eliminated. Can you give me some example? Yes sir, we can give. Can you say examples are gain or loss, gain or loss on sale of PP, gain or loss on sale of investment, interest income, interest expense, correct now, dividend income. These are examples of non-operating item that will be also eliminated. Similarly, expense will be added, income will be deducted. Right now I am not discussing about these 2 points. These 2 points I will explain at the end. So this become operating profit before working capital changes. Operating profit before working capital changes. Then we'll do changes. We will do plus minus for changes in what? Changes in operating asset and liability. Operating assets and liability means any increase in asset will be added. No, will be deducted. Any increase in asset deducted. Any decrease in asset will be added. Any increase in liability will be added. Any decrease in liability will be deducted. I hope everyone knows about this. Anyone who don't know about this, because I don't want to explain this. This minus plus plus minus. Do you know? You want me to explain this? Minus plus plus minus. I hope you all know, because at CA inter level you have done it. At CA final level, and that too in practice batch, if I am explaining, मजा नहीं आता है. Correct now. So I need to assume that this much you should know. But even though you don't know, you just say, I will explain right now. So increase in asset minus decrease in asset plus increase in liability plus decrease in liability minus. Follow. We know, sir. Very good. Now, only one question I just want to say: if these assets and liability are current asset, or it can be non-current asset also. It is current liability, it may include non-current liability also. That I just want to ask, whether these assets and liability are current asset, or it can be non-current asset also. It is current liability, or it can be non-current liability also. That I just want to ask. In this, you might have some doubt. So my question to you all: whether this current asset, this asset is only current asset, it can be non-current asset also. So those who are saying only current asset, only current liability, they are not correct. They are not correct. It means there are some doubt. Just try to understand. Non-current asset can be also operating. For example, debtor can be non-current. Creditor can be non-current. Are you getting? There are many non-current items which may be operating in nature, which may be operating in nature. So you are not correct right now. It means I have written operating asset. Operating asset means we are discussing about operating asset. So we are doing changes in working capital. Working capital means which are operating in nature. So operating asset can be current, can be non-current. Got this point? Have you understood this point? Correct. So it is misconception from CA Inter, because in CA Inter the question is designed in such a way, normally we consider only current asset. Normally we consider only current asset, but in CA Inter also it may be non-current. But in CA Inter there was no such question. Therefore misconception came from CA Inter examination. But can I say it can be current, it can be non-current, it can be current, it can be non-current, understood? But operating nature, and it does not mean always all current assets are operating. For example, just try to understand. I will ask you whether it will be considered or it will not be considered for changes in working capital. I'll ask you some example. You will say whether it will be considered or it will not be considered. Are you able to understand? Are you able to understand? Inventory. You will say inventory whether it is considered yes or no. Point one inventory. Point number two debtor. Point number three creditor. Point number four cash. Point number five. Point number five salary payable. Point number six interest payable. Point number seven interest receivable. Interest receivable. Point number eight. Point number eight. Point number eight. Provision for tax. बताओ 1 2 3 you'll say one by 1 2 3. 1 yes, 2 no, like this, so that I can understand. Yes means it will be considered, no means it will not be considered for changes in working capital. Hello. Okay, this is operating. Operating. Can you see this will be separately because this is the cash and cash equivalent. This will not be considered. Salary payable operating. Interest payable, can I say financing? This will not be considered. Interest receivable means investing. This will not be considered. Provision for tax operating, but this will also not be considered because tax expense need to be disclosed separately. So provision for tax, even though operating, it will not be considered because in cash flow statement, income tax paid is always shown separately. So only inventory, debtor, creditor, salary payable will come. How many have done mistake? Raise your hand. How many have done mistake? Raise your hand. I think most of you have done wrong, na? I think most of you have done wrong. If you have done correct, very good. If you have done mistake, you should say thank you to me. Means just try to understand what actually happened. We think that we know, but actually we don't know. We think that we have understood a chapter, but actually we don't know the chapter. And a similar question will be will be asked in exam. One simple mistake. Can you say your cash flow statement wrong? They will give what? 0 marks. Or they will give out of 8 marks, out of 6 marks, 1 mark. Then you are losing some marks from very simple question. Have you understood this point? Chalega. Okay, sir. Can you please briefly explain what you want explanation? Sir, regarding that addition or deduction of opening asset or liability in CA Inter, we consider that cash inflow and outflow to decide and to deduct. Can you please give your reasoning regarding plus minus? Okay. Now, chalo, I was not supposed to give reason, but if you're asking, I need to give. Now, increase in asset, increase in liability. Just try to understand. Your profit and loss account was prepared on accrual basis, but cash flow statement will be prepared on which basis? Cash flow statement will be prepared on which basis? Cash basis. Just try to understand. Now, whatever sales is coming, suppose that is 10 lakh. That is 10 lakh. Correct? But try to understand. Your debtor, your opening debtor, I will only explain debtor. Creditor you understand by your own. Suppose your opening debtor was 1 lakh. Let's say all sales were credit sales. So sales is 10 lakh. But you collected how much? You collected during the year 9 lakh. 9 lakh. So your closing become how much? 2 lakh. It means just try to understand. For PL account you consider 10 lakh. But for cash flow statement you should consider 9 lakh. 9 lakh not 9 lakh or not. So 10 lakh should be converted to 9 lakh. So we will say deduct 1 lakh. Deduct 1 lakh. And why opening debtor become means why 1 lakh increased to why 1 lakh increased 2 lakh? Because some amount of sales means sales during the year was not collected during the year. Means sales 10 lakh but collection only 9 lakh. Are you getting what I am saying? Sales 10 lakh but only collection 9 lakh. Are you able to understand? It means reduce. So increase in debtor, it means collection is less. Collection is less and therefore reduce it. Therefore reduce it. Understood? So 10 lakhs will be converted 9 lakh. Are you getting? So we do indirect adjustment. Any increase in debtor, it means collection is less. Reduce it. Any decrease in debtor means collection is more. Increase it. Increase it. I hope you have understood now. Have you understood this point? Okay. Have you understood this point? So it is nothing but conversion of accrual basis of accounting into cash basis. Accrual basis into cash basis. I know in CA Inter teachers na say inflow outflow. That is not the correct way of explanation. This is the correct way of explanation. I hope you have understood whatever I am saying. If you want for creditor also I can do, but at CA final level you put some effort. Try to understand by your own. If everything I will say, then what you will do? Got this point? What I have realized in these days now, what I have realized in the last 2 years, what is my realization? CA become difficult because of 11, 12 and CA foundation. CA foundation. 11, 12 and CA foundation. In 11, 12, because now my son is also in class 11. And what I have realized, because accounts I am teaching him, and because trust me, I am not getting time to teach him. But whatever I have tried to whatever I have understood that the school entire horrible studies, horrible. No concept is given, nothing is given. Correct now. And when a student learn in school, even though I will teach now, he will not be convinced. Why? Because he has already gone through the school commerce education, totally rectification, and when we give concept, it become horrible. It become nightmare. Understood what I am saying? So 11, 12 is the, I will say, is the deciding factor whether you have understood the concept of accounts or not. And 11, 12, we do rectification, we die in foundation. Suppose we pass also, Then also we do not become conceptual studies. Then in CA inter we die. Suppose we pass CA inter, we die in what? CA final. So this is one vicious circle. In CA actually, I will say CA become difficult because of these three. Inter okay, final okay, you can manage. If this is okay now, inter final you can manage. But here only destruction has been done. And therefore now I have decided that I will start teaching 11, 12 also. This is my planning. I am trying to start 11, 12 coaching also, and that will be almost free. Almost free. That is only for what? Only for giving something to class 11, 12 student. Correct now. It will miss. I am just thinking to start 11, 12 in YouTube free, full 11 course, 12 course accounts full free. That is in my planning. Correct now. Because in any case, I teach my son. Correct now. And 12, I am not going to take any chance for my son. So I have decided that I will teach 11 means 12 free of cost to give the conceptual studies to the student who want to do CA. And if your 12 base is strong, 11 base is strong, you'll pakka do good in what? Your accounts in what? In CA foundation, inter and final. Am I right or not? I think you also is aware about this fact. Understood? Have you understood this point? I'll just announce it. One request to all of you that you just spread to your juniors that anyone who is in class 11, 12, if they want to learn conceptual studies about 11, 12, they can join my channel. I will just soon start my new channel for 11, 12. Correct. It will be from base. I'm not worried. One student, two student, three student is also learning from me. I'm happy with that because I know right now I'll be totally new for class 11, 12. I need to also learn many things how to teach at lower level because I'm teaching at final level. Teaching at lower level is very difficult. So I need to also learn that. But one commitment I can give that I'll give conceptual knowledge. And if any student is studying from me, trust me, CA foundation, CA inter, CA final, that will become easy. Sir, where diamond rings is what is this? Sir, where diamond rings means what? Have you understood? Acha, have you understood this point? Foundation. Abhi 11, 12 and then foundation I will start because first I will start 11, 12 together and then I will think about foundation also. I can't start everything together now because I have final inter also. CBSE, ICSE, I'm thinking both only. CBSE, ICSE, but more focus first will be in CBSE. Then I will switch to ICSE also. But first I will start with CBSE. Then I will step by step. I can't go together everything because I need to study now CBSE, ICSE, what is in the syllabus. Till now I have not studied anything. Okay, sir. Now, this you have understood or not? Come to the point now. Leave this, leave it. Have you understood whatever I am saying? So this is what increase in operating asset, decrease in operating asset, increase in operating liability, decrease in operating liability. From examination point of view, the rule is what? Minus plus, plus minus, minus plus, plus minus. Okay, understood. Means can I conclude in this way? The examples of non-operating current asset and non-operating current liability means there are some current asset, current liability which are non-operating nature, which will not be considered for calculation of changes in working capital. For example, interest receivable because this is investing activity, interest payable because this is financing activity, fixed deposit if it is not cash equivalent, this is investing activity, short term borrowing, this will be financing activity, loans and advance given, this will be investing activity, this will not be considered. Following assumption will be applied if the question is silent. Some assumption need to be taken if the question is silent. Suppose they have given other non-current asset or liability. They have given other non-current asset other non-current liability, then always assume related to operating activities, because you can't assume investing and financing. Suppose in the question they have written other non-current asset, other non-current liability. Question is silent. Assume related to operating activities. Other current asset, current liability. Assume related to operating activities. Other financial asset, other financial asset, other financial liability. Means under financial asset they have written other financial asset. Under financial liability they have written other financial liability. If nothing is given, assume related to operating activity. Means consider this for what? Working capital changes. The non-current financial asset, non means non-current. Under non-current asset they have given financial asset, but they have not given what is the bifurcation. They have not given whether it is loan, investment, whatever. They have not given that. Then assume it is related to investing activities. So any non-current they have given, means they have given non-current asset. Under that they have mentioned financial asset only, and they have not given whether it is loan, investment. Then assume it is investing activities. Non-current financial liability, nothing is given, but under non-current liability they mention only financial liability. We'll assume it is borrowing and is related to financing activity. These are the general assumption. You can't change this assumption. Then current financial asset, under current asset they have given only financial asset. We'll assume it is operating activities. Current financial liability, nothing is given. We'll assume related to operating activities. And this assumption you can't change in exam. The same assumption need to be applied in any questions. Understood this part? Have you understood this part? Then coming to current tax liability, current tax asset. Current tax asset, current tax liability should not be considered for working capital changes, as income tax payment should be shown as a separate item under cash flow from operating activities. Got this point? Chalega? Yes, sir. Okay, sir. So once you have done changes in working capital, this will be cash generated from operation. From that we'll separate deduct income tax paid, and this will be cash flow from operating activities. We'll take some question, but not now. At the end I will take some question. Any doubt about this format? Any doubt about this format? Only one point is left, that is about unrealized exchange gain or loss, that I will explain at the end. Apart from this, any doubt? No doubt. Now cash flow from investing activities, I think just read it. Cash flow from financing activities, just read it. I don't want to discuss, because this you can understand by row. Then now there are some special point. Let us understand some special point. Then we'll move to the question. Reporting cash flow on a net basis. So what India says that if nothing is specifically mentioned, cash flow should be always reported on gross basis, not on net basis. So cash flow will be prepared, presented on gross basis. Gross basis means receipt would be shown separately and payment will be shown separately. Understood? For example, suppose interest income is 1 lakh and TDS deducted is 20,000. So you received how much? 80,000. Now in your cash flow statement, whether you write down 1 lakh interest income minus TDS or you write down 80,000 net. So you write down 1 lakh as interest income minus TDS separately. You not write down on net basis. So don't write on net basis unless otherwise, unless something is specifically mentioned in your cash flow statement. There are some special points. PP purchase or constructed for let out and subsequently held for sale in the ordinary course of business. If you remember, under India 16.1, we have done one special point that any PP which was initially given on rent to others, then it was included in the inventory in the ordinary course of business. It will be reclassified from PP to inventory at carrying amount. It is quite possible in cash flow statement what we done. Look at that PP which was purchased or constructed for let out purpose and subsequently held for sale in the ordinary course of business. This is routine activities of the entity. Therefore, India 7 says any acquisition and construction such PP will be operating activities. Rent received from such asset will be operating activities, and sale of such asset will be also operating activities. Means any PP which is initially let out and subsequently held for sale in the ordinary course of business. Understood? Got this point? If suppose I am using a camera and camera is given rent and that is never included in my inventory, that camera, for that camera, this will be investing, this will be investing, this will be investing. Understood whatever I am saying? This is special point. Any PP purchase or constructed or let out initially and subsequently held for sale in the ordinary course of business. Got this point? Till now not asked in exam. Then operation of financial company, banking company, NBFC, non-banking financial company, etc. If the question is silent, always assume that company, whatever is given, is other than financial company. Other than financial company. But if the question specifically mentioned, then we have to do as per financial company. Can I say for financial company, there are many transactions which are of operating nature. For example, purchase and sale of investment in shares or any other securities, operating activities. Means for other company, can I say it will be investing activity? Cash advance or loan given for financial company, operating activity, but for other company it is an investing activity. Any interest received on such investment for financial company, operating activity, but for other company it is investing activity. Any deposit received, deposit means some amount received from other party, so operating activities, but for other it is financial activity, financing activity. Any interest paid on such deposit, operating activity, but for other company it is financing activities. Chalega? I think very much clear, very much clear. Interest and dividend paid, interest and dividend paid for financial company, other company. Interest paid, operating, financing. Interest received, operating, investing. Dividend received, operating, investing. But be careful about dividend paid. Dividend paid is always on share capital. So any dividend paid will be financing activity for both, whether it is financial company or other company. So be careful about dividend paid. Dividend paid, whether it is for financial company or other company, for both it is what? Financing activity. For both it is a financing activity. Chalega? This is one very good question. Come to that question. Question number 21. Come to that question. Come to that question. Question 21. What will be the classification for following item in statement of cash flow for both bank and financial institution and other entity? Means what will be for banking company, means financial company and other company. You will say interest received on loans and advance given. You will say do it right now. Everyone just do first in your book, then we'll discuss 1 to 12. First do everyone, read it and do it right now. Don't say anything in chat box. Don't say anything in chat box. Okay, just write down in a piece of paper, then we'll discuss each and every point. When you do mistake now, you understand in a better way. When you don't do mistake, you think that acha, this point we know, we are to Paramatma, we know everything. So first do mistake, then we'll discuss on this. Once done, say done so that I can start discussing. Done? Okay, sir. चलेगा? Let us discuss fast. Okay. So interest received on loans and advance given, I think for bank, this financial company, operating activity, investing activity, no doubt in this. Interest paid on deposit, operating financing, in this also no doubt. Interest and dividend received on investment in subsidiaries, associate, any other entities. Can you say any investment in subsidiaries? That is one type of investment made by financial company also to generate profit, and therefore this will be investing, this will be investing. I think here you may have done wrong. Okay. Dividend paid on preference share capital, equity share capital, dividend paid already I have said. Financing, I think no doubt. Finance charge paid by lessee under finance lease, as per, because for this one clarification has been given under Ind AS 116, both will be financing activity. So one clarification has been given under Ind AS 116, any finance charge paid by lessee under finance lease and any payment of principal amount, that will be also what? Financing activity. The payment to a reduction of outstanding, this is not correct. This is outstanding lease liability, because for lessee there is no finance, there is no operating lease. So it is not under finance lease, it is under lease. Under lease, okay. This is under lease because now there is no concept of finance lease or operating lease in the books of lessee. Chalega. So this is also financing. Here I think you have done correct only, no doubt. But interest paid to vendor for acquiring fixed asset under deferred payment, which means this is covered under India 16. So under India 16, if you have done some deferred payment means you will pay 1 lakh after 1 year. So as per India 16, cost price will be equal to present value of our future payment, present value of future payment. So whatever you are paying towards purchase of fixed asset, that will be what? Investing activities. And whatever extra amount you are paying, interest paid, that will be financing activities. तो थोड़ा सा different यहाँ पर you can see interest paid will be financing activities, but principal some payment under deferred payment basis for acquisition of fixed asset, that will be investing activities. I think you have done mistake here also. If you have done, to rectify it. Then penal interest received from customer for late payment, operating. Penal interest paid to supplier for late payment, operating. This is operating. Interest paid on delayed tax on payment, operating. Interest received on tax refund, operating. I think in this, no doubt, you have done correct only. Any doubt after my explanation? So you can ask me. No doubt, just mention proceed, I will proceed. What is RBSE? If you allow me, then I will join you for that. Only 7 I made a mistake. Of course, you could have done mistake, but now understood or not? So very good. If you have understood, then we can proceed. So this also you have understood. This type of question can be asked in multiple choice question or can be asked for descriptive point also for 4 to 6 months, can be asked in exam. Now taxes on income, what India 7 says that taxes on income is usually normally classified as operating activities. Means if the question is silent, always it will be operating activities unless they can be specifically classified, yeah, identified as financing or investing activities. The best example is what? Any TDS on interest received or dividend received will be investing activities. Means any tax paid on income generated from investing activities will be what? Investing activities. For example, tax paid on long-term capital gain. Long-term capital gain means on the gain on sale of PP, etc., or investment property, that will be investing activities. Any dividend distribution tax paid, now it has been withdrawn. But suppose they have given dividend tax paid on dividend paid, so it will be financing activity, but now it has been withdrawn from Income Tax Act. Chalega. Next point. Point number E, changes in ownership interest in subsidiaries and other business. Very interesting. This point is applicable for consolidated financial statement. Changes in ownership interest in subsidiaries and other business. For example, initially they acquired 20%, it is an associate. Then again acquired 20%, it is an associate. Then again acquired 20%, it becomes subsidiary. Then can you say 10% again acquire, it is a subsidiary. Then 5% disposed, it is again subsidiary. Then 40% disposed, there is a loss of control. Then 25% disposed, total investment disposed. Now what they are saying, can you say this point, when the control is obtained, the control was obtained यहाँ पर, and this was loss of control. Are you getting what I am saying? Here the control was obtained and here there was loss of control. So this is known as changes in non-controlling interest, and case non-controlling interest is equity. Therefore, this will be treated as financing activity. So any transaction which changes the proportion of NCI will be financing activities, and the other will be always investing activities in consolidated statement of cash flow. Understood? So these first 3 will be investing, last 2 will be investing, but this will be what? Financing activities. Understood this point? Very important from examination point of view. Have you understood this? So what they want to say? The aggregate cash flow arising from obtaining or losing control of subsidiaries or other business shall be presented separately and classified as investing activities. And cash flow arising from changes in ownership interest, means changes in NCI in a subsidiary that do not result in a loss of control, shall be classified as financing activity. Shall be classified as financing activities. Now just try to understand one more point. Whenever you obtain control, what journal entry you do? INA account debit. 2. Suppose PC paid in cash. Correct now. INA account debit, PC paid in cash, and 2 NCI. There may be goodwill. Now suppose this INA include 2 lakh cash, means you received 2 lakh and you paid 20 lakh cash. Quite possible. So PC paid in cash 20 lakh, but I may include cash and cash equivalent of which company? Acquiring company. So what India 7 says that in this case, of course, it is an investing activities because in this you obtain control, but your investing activities, the your outflow will be 20 minus 2. 20 minus 2, that is 18 lakh. Understood? In SFS tokenization, it will be investing activities now. There is no doubt. In SFS, there is no changes in proportion of NCI. So this point I am discussing from consolidated finance statement. Understood? Yes, sir. Have you understood this point? You paid 20 lakh, but you received 2 lakh of cash and cash equivalent of what? Acquiring company. So what is the net cash outflow? That is 18 lakh. That will be your cash flow from investing activities. Same thing. Whenever there is a loss of control, then INA will go out and cash you are receiving. So in that case, it will be also investing activities, but the net amount should be considered as investing activities. Chalega. So that is given. Aggregate amount of cash paid or received as consideration for obtaining or losing control of subsidiaries is reported in statement of cash flow. Net of cash and cash equivalent acquired or disposed as a part of such transaction. Understood this part? Let me explain this with one question. Come to question number 17. Come to question number 17. Can be asked in multiple choice question, this type of question. Company acquires 70% equity stake in company B in July 2001. The consideration paid was cash consideration 15 lakh. 2 lakh equity share. Can you see this become non-cash transaction, and any non-cash transaction will not be reported in cash flow statement because any 2 lakh equity shares issued, can I say, because you have acquired business and you are issuing equity share, that become non-cash transaction, that will not be reported in cash flow statement. On that acquisition, company B has a cash and cash equivalent balance of 2,50,000. So how much paid? 15 lakh. How much received? 2,50,000. What is the net amount? Net amount is how much? 12,50,000. That become cash flow from investing activities. On 10th October, company further acquired 10%. This is changes in proportion NCI. So this 8 lakh will be considered as financing activities. Chalega. You can see same thing has been given. 15 lakh less 2,50,000 is what? Investing activities. And what? Further, it is given additional 10% financing activities. Understood? Got this point? What is number 7 entry wrong? What is this? Okay, now. Okay, sir. Chalo, done. Then about non-cash transaction. Right now we are discussing about one of the non-cash transaction. So what cash flows means? India 7 says investing of financing activity that do not involve the movement of cash and cash equivalent shall be excluded from a statement of cash flow. Example, the acquisition of asset either by assuming directly related liability or by means of lease. So whenever you acquire some lease, means ROE asset, what generally do you do? ROE asset accountable lease liability initially. There is no movement of cash, even though you are acquiring one asset and there is one what? Borrowing also. So that will not be considered in cash flow statement because that is a non-cash transaction. The acquisition of entity by means of equity issue, non-cash transaction. The conversion of debt into equity, non-cash transaction. PP purchase in exchange of any other asset, suppose no monetary consideration, so it is also non-cash transaction, will not be included in cash flow statement. However, it should be disclosed by way of notes to statement of cash flow. Chalega. Understood? The last point is foreign currency cash flow, that I will do at the end. This point I will do at the end. Let me take some question. Let me take some question. There is one very good question. I will like to take that question directly because other question from my point of view, whatever question related to cash flow statement, that you can do. Am I right or not? So I will take one question which I like personally. Balance question from my point of view don't require my help. Am I right or not? Cash flow statement. Do you want me to take some questions? Or I will like to take one question which is very interesting and which is not yet asked in exam. Come to question number 12. Yeah, question number 12. Yeah, we'll do the other question. Very good. I'll give some question for practice that you do. Very good. Question 12 is very good question. The relevant extract of consolidated financial statement A Limited are provided. So extract of CBS is given. Non-current asset PP. PP is investing activity. Investment in associate is an investing activities. Financial asset if nothing is given. But they have given financial asset, non-current asset. What will assume? They have not given anything. What is the bifurcation of financial asset? What you will assume? You will assume as operating or non-operating. Non-operating means this will be investing activities, inventories, operating, trade receivable, operating, cash and cash equivalent separately, current liability, trade payable, operating. Extract of consolidated SOPL. Revenue, cost of goods sold, GP, other income, operating expense, other expense, interest expense. Financing activity. Yes, share of profit from associate. Yes, this is non-cash item. Because what journal entry you do for share of profit from associate, investment account debit to share in profit, no cash has been received. So it is actually non-cash. Non-cash profit before tax. The below information relevant for A Limited Group. A Limited has spent 30 lakh on renovation of building. A Limited charged the entire renovation cost to PL account. So is this one error? One error has been given. If there is one renovation cost which has been charged to PL account, so that is not correct. So what journal entry will do? You will increase the building account and credit to PL account. You will do one journal entry building account debit to PL. You need to increase your PL by 30 lakh. Then on 1st April 2001, A Limited acquired 100% shares in S Limited. Means control is obtained for cash 300 lakh. Of course, this is investing activities. Fair value of asset acquired and liability assumed under the acquisition are as under PP, inventory, PR, trade receivable, cash and cash equivalent. So 300 paid and how much cash and cash equivalent received. So what is the net amount? 280. So this 280 will be what? Investing activity. Total asset less trade payable. This is net asset on acquisition. So this become INA on the date of acquisition. INA on the date of acquisition. A Limited property plant equipment comprise the following. You can see opening balance is given. Addition including asset in S Limited means how much 800 lakh. Out of that how much acquired from subsidiary company 140. So it means minus 140. The balance will be purchased during the year. Revaluation surplus, disposal of asset 490 lakh. Depreciation for the year 290 lakh. Carrying amount is what? Closing balance. Now my one question to you, when we deduct this 490, disposal, sale of asset. So my question to you all, this is the book value of the asset sold or the sale price of asset sold. My question to you all of you, 490 whatever is deducted from PP, this is the book value of asset sold or this is the sale price of asset sold. Very good. Excellent. So you are not doing mistake here. It is the book value of asset sold. Very good. Yes, sir. A Limited constructed a machine that is a qualifying asset and incurred construction cost of 40 lakh. That has been also charged to other expense. Means this is also one mistake that has been debited to PL account. It is a construction cost. So what journal entry will do? Rectification entry. Machine account debit to PL. So your PL will increase by 40 lakh. Understood? Of the interest cost 110 lakh charged to PL, 10 lakh include interest cost on specific borrowing that need to be capitalized. Means out of 110 lakh, how much? You can see interest expense 110 lakh. Out of this 10 lakh need to be capitalized. 10 lakh need to be capitalized. So what journal entry will do? We need to increase machinery, and can I say we need to decrease our interest expense? We'll say to interest expense, or that will be also credited to PL. How much? 10 lakh. So there are three rectification items. There are three rectification item. Understood? Yes, sir. PP was sold for 630 lakh. So this was book value 630. 630 minus 490. How much? 630 minus 490 means what is the gain on sale? 140 is the gain on sale. Gain on disposal is adjusted against operating expense. We are not here to redraft the SOPL. They have included a gain in operating expense. So we are not going to redraft the SOPL. 140 is the gain that has been considered in SOPL. So we need to do adjustment for what? Non-operating item. A Limited purchased 30% interest in associate for cash on 1st April 2001. The associate reported profit after tax 400 lakh. So 400 lakh into 30%, how much? 120. And you can see 120 is already included in SOPL. 120 is already included in SOPL and paid dividend of 100 lakh for the year. My question to you all, for sharing profit, what journal entry will do? Investment account debit to sharing profit, and sharing profit is transferred to PL. What is journal entry for dividend received? Because whatever dividend paid by associate will be received by investor. So what journal entry will do for dividend received from associate? You will give me the journal entry. Because in days 28 we have done. Very good. Excellent. It is cash account debit or bank account debit to investment. Means can you say this will not be transferred to PL account? This will be transferred to investment account, and that is only given in SOPL. Dividend receipt has not been transferred to PL account. Okay, sir. Impairment test was conducted. The following were impaired as under to goodwill impairment loss. Can I say non-cash? Intangible asset impairment loss, non-cash. The goodwill impairment loss relate to 100% subsidiary. Assume that interest cost is all paid in cash. You are required to determine cash generated from operation from group reporting purpose for the year ended 31st March 2002. Good question or not? Now in this, I need to explain point number 2 first. Whenever A Limited acquired as subsidiary, you can see they have acquired some operating item also, inventory, trade receivable, and trade payable. So this is, can you say, one type of non-cash movement? Means your inventory will increase, but there is no cash. Are you getting? The inventory is increased, trade receivable increase, and your trade payable increase. So some adjustment is required to find out working capital changes. Working capital changes. This is interesting point. This is interesting point. So what adjustment need to be done, that I am going to explain first. Let us come to solution. Question number 12. Question number 12. Yeah. So can I say first we'll do calculation of rectified profit. What is the profit given as per SOP 1840? There are three rectifications. One is renovation cost. Renovation cost wrongly charged to PL, added. Construction cost wrongly charged to PL, added. Borrowing cost wrongly charged to PL, that will be capitalized, added. So this become your rectified profit. This too I hope you have understood. Then changes in working capital. So you can see there are three working capital in the question: inventory, trade receivable, trade payable. You need to find out changes in working capital. So first we write down closing balance. Closing balance written. Then from this you will minus acquired from subsidiary company. So minus acquired from subsidiary company, because can you say, just try to understand that whatever acquisition of control, whatever you are paying, that is what investing activities, and therefore this should be deducted from here. This should be deducted from here now. So minus 60, minus 30, minus 50, because that is related to what investing activities. I hope you are understanding. You receive what? You receive inventory, trade payable, but for acquisition of interest in subsidiary company. For acquisition of interest in subsidiary company, so that will be deducted. And then you compare with the opening balance. Now you will consider changes as plus minus. So you can see it is decrease, it is also decrease, it is also decrease. So decrease in asset, what will do plus, and decrease in liability, what will do minus. So you can see it will be plus, it will be plus, it will be minus in what your cash flow from operating activities calculation. Have you understood this working note number 2? This is super important, already asked in exam, but that was very small question, but I think now you have understood. They ask small question also, this is very important point where you get a mistake. Have you understood this point? Yes, sir. Then can I say we'll calculate calculation of cash generated from operation. We'll start with rectified PBT. Now adjustment for non-cash item and non-operating item one by one. Can I say, can I say they have given depreciation. Depreciation is given in PP. You can see depreciation was given in PP calculation. Depreciation 290 lakh. Depreciation will be added. Then there was impairment loss. Two impairment loss has been given: one goodwill, one intangible asset. Then there is one gain on sale of PP, that is minus 140. Then there is one interest expense given in SOPL, but now it will be 100 lakh, because out of 100 lakh, 10 lakh you have already capitalized. This is interesting. Here you can do mistake, even though you have corrected it, but you can do mistake. Then there is one sharing profit from associate, that is also non-cash, that will be also eliminated. So minus, the income will be minus. I hope this adjustment now you have understood. So this will become operating profit before working capital changes. Now decrease in inventory already calculated, decrease in trade receivable already calculated, decrease in trade payable already calculated. This become cash generated from operation. Your solution is done. Solution is this much only. But then also I need to explain some more point. Means this is a perfect question for 6 to 8 marks. Can be asked in exam. Solution is this much only. But then also I will explain some more point. Okay, sir, can we add it to opening? You are saying about this. If first add and then minus. Huh? What you are saying? What is your doubt? Do in this way, Baba. There you answer will come same, but effect might be reversed in some situation. Okay. Do in this way. I will suggest do in this way. Okay. Okay, sir. Now, example in this question. Suppose in the above question They also are cash flow from investing and cash flow from financing activities. You can see there is one investment in associate. You can see closing balance is given, but opening balance is at what price it was acquired during the year, that was not given. Means we can find out it. What is the sharing profit? 120 investment account debit sharing profit, and there is the dividend received bank account debit investment, that is 30% of 100 lakh, that is 30. So can you see, you can calculate this. Okay, this is the purchase during the year. So this 710 will be investing activities outflow, and this 30 dividend received will be also investing activity inflow. Understood this point? This point have you understood? Chalega. Then can you say we'll also prepare one PP account? Can you say opening balance given 4650? Then whatever you acquired from S Limited, that is 140. Whatever balance you acquired, that is cash to cash 660. Because you can see what is given in the question. In the question is given that total acquired is 800, including acquired from S Limited. So from S you acquired 140 and balance you acquired in cash. Balance you acquired in cash. Chalega. Then revaluation surplus. Then gain on sale of PP 140 and by bank 630. Correct now. By depreciation 290 and to bank there are three rectification, reconstruction cost, construction cost and borrowing cost, and by balance carried down. Now just try to understand what will be investing. This will be investing activity. This will be investing activity sale. Correct. This will be also investing activity. Construction cost will be also investing activity. Borrowing cost, you will say, borrowing cost which has been capitalized to PP will be investing activity or financing activity. Borrowing cost which has been capitalized to PP will be investing activity or financing activity. Borrowing cost whatever you have capitalized to PP will be investing or financing. Sir, it is written, sir, financing. Why you are asking? It will be financing activity. Be careful. Be careful. Borrowing cost, even though capitalized, related to finance, it will be financing activities. Chalega. Understood. Then can you say cash flow from investing activity? What will come? Acquisition of subsidiary. Already I have said they acquired subsidiary, paid 300 minus 20, 280. Acquisition of an associate, 710. Understood. Then dividend received, 30. Then purchase of PP, 660. Then sale of PP, 630. Then renovation cost, construction cost, purchase of, it is financial asset, sorry. There is one financial asset also now. Means financial asset, there is one more financial asset. Because 2150 become 1800. Means 1800 become 2150. To increase, so that is investing activity. That is what? Financial asset. Understood? Correct. So in this way, you can also go to and also explain what is financing activities. Then cash flow from investing activity, there is only one interest payment, 100 plus 10, 100 which was charged to PL account and 10 which was capitalized. 110 will be what? Financing activities. Understood? Chalega. So I have also explained investing and financing, but that was not a part of the question. So in the question, if they ask, they will ask only operating activities that you can do. Understood? Have you understood? Yes, sir. Now let us come to foreign exchange. Now, foreign currency cash flow. When I say foreign currency cash flow, just try to understand. Any cash flow arising from transaction, means any cash flow arising from foreign currency transaction are recorded at transaction date exchange rate. Are recorded at transaction date exchange rate. Of course, it will be recorded at transaction date exchange rate. And can you say any unrealized exchange gain? Can you say exchange gain can be of two types? Realized, unrealized. Means on settlement it become realized, but on translation it is unrealized. So any unrealized exchange gain or loss from changes in foreign exchange rate are not cash flow. Are not cash flow. Are not cash flow. Understood? Let me explain with one example. Let me explain this particular point with one example. Because I used to say very important this question now. I used to say super important, super important. That was already asked in one of the exam. Correct. When I say super important, and when they ask now, we feel very happy. कि चलो, institute also try to understand our point. Foreign currency transaction, let me explain. Suppose on 1/4, you have done one transaction, debtor account debit to sales at $10,000 into 80, it will become 8 lakh because $1 is equal to 80. Now on 1/Feb, out of $10,000, you collected $4,000. So you'll do bank account debit 4,000 into 82 because now the exchange rate become 82, so 3,28,000. But debtor was already recorded at 4,000 into 80, that is 3,20,000. So there is an exchange gain 8,000. Then on 31st March, this being foreign currency monetary item, this will be translated by using closing exchange rate, and let's say it become 85. So again $6,000, there is a gain of 5. So 6,000 into 5, debtor account debit to exchange gain 30,000. Yes, there are two type of exchange gain. This 8,000 is realized, but this 30,000 is unrealized. So this 8,000 realized and this 30,000 unrealized, but realized, unrealized, both will be transferred to PL account. Both will be transferred to PL account. Understood? Now, if you prepare SOPL, look at his revenue was how much? 8 lakh in our question. 8 lakh. Exchange gain will be 8,000 plus 30,000, 38,000. So total income become 8,38,000. Let's say purchase cash paid. It is a cash paid is 7 lakh. So 7 lakh become expense. So your profit before tax become 1,38,000. So this become an extract of SOPL. Extract of SOPL. Now you need to calculate cash flow from operating activities by using direct method or indirect method. If you're using direct method, then the no adjustment required because your collection is 3,28,000. That 3,28,000, and that is inclusive of 8,000. And what is the payment? Payment made is 7 lakh. So direct method is very easy. Collection from debtor 3,28,000. Payment to supplier 7 lakh. So the cash flow from operating activity become 3,72,000. 3,72,000. Understood? Any doubt up to this? Any doubt up to this? No doubt. Now coming to indirect method, try to understand. They said unrealized exchange gain is not a cash flow, means it is non-cash item. So first try to understand. We'll start from PBT 1,38,000. PBT is 1,38,000. Can you see we should do adjustment for unrealized exchange gain, that is 30,000. So it will become minus because exchange gain is an income, to minus it will become 1,08,000. 1,08,000. And then can you say we need to think about increase or decrease in debtor. So opening debtor was nil. Closing debtor become how much? Closing debtor now become how much? Yes, closing debtor become now 6,000 into 85. 5,10,000. 5,10,000 means in balance it is coming 6,000 into 85. That is 5,10,000. But if you have eliminated exchange gain, what is unrealized? So can you see? It means this journal entry got reversed. If this journal entry got reversed, it means your debtor become how much? 6,000 into 80 na. It become 80 means how much? It's the 4,80,000. So therefore now you should compare opening data with this closing data. That is only concept, because if you have eliminated this, so your data should be also reversed, and therefore in this case what we'll do, nil minus 6,000 into 80, that will be compared minus 4,80,000, because there is an increase in data. Increase in data means minus 4,80,000. So your cash flow from operating activity is 3,72,000, and this match with the direct method. I hope the concept you understood. Have you understood the concept? But can I say, because in this case unrealized gain was related to operating activity, therefore adjustment was not required, and therefore we can do one shortcut. Shortcut is what? 1,38,000. Ignore these. This is 1,38,000. Then compare changes in debtor with the same amount whatever is coming in the balance sheet. Means 5,10,000. The same answer will come. So of course, can I say this become easy from examination point of view? This become easy from examination point of view. But there is a rule. Can I say unrealized exchange gain or loss related to operating activities will not be considered, will not be adjusted. But unrealized exchange gain or loss related to investing or financing activities will be eliminated. Of course, now there can be some foreign currency borrowing, and in that case also there can be some unrealized exchange gain or loss that need to be eliminated. So what is the rule? Rule is what? Any unrealized exchange gain or loss related to operating activities will not be eliminated, but any unrealized exchange gain or loss related to financing activities and investing activities will be eliminated. Have you understood this point? Have you understood this point? Have you understood this point? Understood. And therefore, in my statement of cash flow, whatever format I have given, that time I said I will say afterwards. You can see what I have given. Plus minus unrealized exchange gain or loss on foreign currency, investing and financing activities will be eliminated. Similarly, any unrealized exchange gain or loss on foreign currency, cash and cash equivalent will be also eliminated. Only any unrealized exchange gain or loss related to operating activities will not be eliminated. Have you understood this point? Have you understood this point? Follow. Let me take one question, whatever was asked in exam. The question, whatever was asked in exam, that question I will take. This was the question, question 22. Question number 22. Question was asked in which exam? It was asked in September 2005 for 4 marks. Oh my god. This should not be a question of 4 marks, but they have asked for 4 marks only. Correct. A Limited, whose functional currency in Indian rupee. What example you want? Which example? I am doing the question. Any example, sir? Means which example you want? अरे बाबा, you're not responding only. चलो ठीक है. A Limited, whose functional currency is Indian rupee, had a balance of cash and cash equivalent of rupees 2 lakh. Means opening cash and cash equivalent given, but there were no trade receivable or trade payable balance as on beginning. Means there was no opening trade receivable, there was no opening trade payable. During the year 1780, the entity entered into following foreign currency transaction. A Limited purchased goods for resale from Europe at euro 1 lakh when the exchange rate was 50. The balance still unpaid, means the account is not yet settled, when the exchange rate is 45. An exchange gain or retranslation of trade payable, because 1 lakh 50 become 45, so it decreased, so it become gain, so that trade payable is 5 lakh. is recorded in PL. So this is unrealized but related to operating activities. Related to operating activities. Okay. A Limited sold goods to American client for $1,50,000 when the exchange rate was 40. This amount was settled when the exchange rate became 42. Settled means this is settled. A further exchange gain, so exchange gain was 1,50,000 into 2. That is 3 lakh. 3 lakh is the gain. But this become realized. This become realized gain. A Limited also has borrowed euro 2 lakh under a long-term agreement when the exchange rate was 50 and immediately converted to 1 crore proceed. The loan was retranslated at 45. Once again, this is borrowing financing activity. So for retranslation, there is a gain of how much? 5 into 2 lakh means 10 lakh gain, which further exchange gain recorded in SOPL. So there is a 10 lakh gain, but this is unrealized. Unrealized will be transferred to what? Unrealized, but this is related to financing activity. A Limited therefore recorded cumulative exchange gain. What is the cumulative exchange gain? It is 5 lakh plus 3 lakh 8 lakh plus 10 lakh 18 lakh. So 18 lakh exchange gain. In addition, A Limited recorded gross profit. Gross profit will be how much? You can see 1 lakh into 50. 50 lakh is purchase and 1,50,000 40. 60 lakh is sale. So there is a gross profit of 10 lakh. Means what is the total profit? Total PBT is 10 lakh plus 18 lakh, that is 28 lakh. Ignore taxation. How cash flow arising from above transaction would be reported in statement of cash flow? Good question. I like this question personally. I used to say it will come, and in exam it asks in September 2025. Correct? Okay. Now let me explain. So can I say I will use this whatever IC I is using. Cash flow from this I am not following. I am following this. Cash flow from operating activity PBT 10 lakh plus 18 lakh 28 lakh. Now adjustment. Can I say we need to adjust the unrealized exchange gain related to financing activity, and that is 10 lakh. So 10 lakh we have eliminated minus 10 lakh. So operating profit before working capital changes become 18 lakh. Now trade payable. In a trade payable, it was nil initially. It was nil initially. Okay. Then trade payable, what is the closing trade payable? So closing trade payable become 1 lakh into 45, that is 45 lakh. So your closing trade payable become 45 lakh. So there is an increase in trade payable, an increase in trade payable will be added. You can see 45 lakh has been added. This become net cash flow from operating activity. Understood? Then cash flow from investing activity 0. But we have cash flow from financing activity, proceed from foreign currency borrowing, and how much proceed received initially? 1 crore only. Now you need to take as per the transaction date exchange rate, that is 1 crore. 1 crore will be taken. This become 1 crore. Financing activities. So this plus this plus this is the net changes in the cash and cash equivalent. That is 6. That is how much? Is 1 crore 63 lakh. Then opening cash and cash equivalent 2 lakh. So your closing cash and cash equivalent will become 1 crore 65 lakh. Understood? Have you understood? This is the solution. Have you understood the solution? Have you understood the solution? Yes, sir. Now come to the last point of this chapter. That is reconciliation of cash and cash equivalent. Component of cash and cash equivalent. Can you say when I say component of cash and cash equivalent, what will come? Can you say it will include cash in hand? It will include cash at bank, current account. It will include short-term borrowing, short-term investment classified as cash equivalent. Then foreign currency in hand. Then foreign bank deposit. Then minus bank overdraft repayable on demand. Bank overdraft repayable on demand. This will be closing cash and cash, means this will be cash and cash equivalent as per statement of cash flow. So this is the component of cash and cash equivalent, and as per India's 7 you should disclose the component of cash and cash equivalent. But just try to understand, when I am saying foreign currency, foreign currency in hand and foreign currency bank deposit. Just try to understand. Suppose you acquired 10,000 foreign currency when the rate was 70, but now it become 80. My question to you all, how much will come in balance sheet and how much will come in cash flow statement? First you say me this. Means how much will come in cash flow statement, how much will come in balance sheet. It is in balance sheet 10,000 into 80 will come, but in cash flow statement, so 10,000 to 70 will come because you will eliminate any unrealized exchange gain. So in cash flow statement, it will record a transaction date exchange rate 10,000 into 70, 10,000 into 70. And because of this reason, is the cash and cash equivalent as per statement of cash flow and cash equivalent as per balance sheet will not tally. And therefore, Ind AS 7 require reconciliation between them. Similarly, can see bank overdraft repayable demand, it is deducted in cash flow, it is deducted in this chapter, but in balance sheet it will be shown in current liability. And this is also one of the reasons that cash and cash equivalent as per statement of cash flow and cash equivalent as per balance will not tally. Therefore, reconciliation is required. So how to do the reconciliation? So first we write down as per statement of cash flow. Then we'll eliminate, means we will do adjustment for unrealized exchange gain. So we'll add unrealized exchange gain because that was eliminated. Deduct any unrealized exchange loss, but only on cash and cash equivalent. This is unrealized exchange gain or loss on cash and cash equivalent. Cash and cash equivalent. Understood this point? Then plus bank overdraft repayable demand, and this will be as per balance sheet. This will be as per balance sheet. One very good question was asked in exam. Come to question number 24. Have you understood this point? This was the question which was asked in exam. Have you understood? First, have you understood the concept? Understood. Now come to question 24. Jet Limited in India has an overseas branch in USA. It has a bank account having a balance of US 7,000 on 1st April 2019. During the financial year 1920, Jet Limited acquired computer for its USA office in $280, which was paid on the same date. There was no other transaction reported in USA. Exchange rate is given 1st April 2019 70, 30th November on the date of purchase of computer 71, closing 71.5, average 70.5. Prepare extract of cash flow statement for the year ended 31st March as per Ind AS 7 and also foreign exchange profitability for this transaction for the year 1920. They ask you to calculate exchange gain or loss and prepare the extract of cash flow statement. Chalega. Now in this, just try to. First we'll find out exchange difference as per Ind AS 21. So US dollar exchange rate INR. Correct now. Now, of course, this bank balance in foreign country is a foreign currency monetary item. So balance as at the beginning 7,000. We'll use opening rate. It become 4,90,000. Then purchase of computer on 38/11 280 minus. We'll use the transaction rate exchange rate. This is minus. This become closing balance 6720. This is the closing balance. Now this closing balance being foreign currency monetary item will be translated by using closing exchange rate. This is the amount. And this become exchange gain. Of course, it is unrealized. So this become exchange gain as per Ind AS 21. First, have you understood this part? Now let us come to extract of SOPL. Extract of cash flow statement. Now just try to understand. There is only one exchange gain. This is PBT. Because there is no other information given, we will start with PBT as 10,360. So extract of cash flow statement. Cash flow from operating activities. PP is 10,360. Yeah, this is related to cash and cash equivalent. So this exchange gain related to cash and cash equivalent, and therefore you need to eliminate it. Therefore, you need to eliminate it. Okay. Adjustment, unrealized exchange gain on cash and cash equivalent is 10,360. Therefore, your net cash flow from operating activities nil. Correct. Now we'll do cash flow from investing activity, purchase of computer as per transaction reduction rate, that is 19,880 to 19,880 outflow. Financing activity 0. So your net decrease in cash and cash equivalent 19,880. Correct. Your opening cash and cash equivalent was 4,90,000. So your opening cash and cash 4,90,000. So your closing cash and cash equivalent will be 4,70,120. Your closing cash and cash equivalent will be 4,70,120. And can you say this amount will be this amount without exchange gain? Because as per cash flow statement, you take 4,70,120 only. 4,70,120. Now you need to prepare one reconciliation statement. What is the reconciliation statement? Your cash flow means cash and cash equivalent as per statement of cash flow is 4,70,120. Add unrealized gain. This will be as per balance sheet. This is as per balance sheet. Understood this point? Have you understood this point? Good question. This is also very good question. Totally based on concept. If you don't know the concept, then you can't do it. But in your solution now, I don't understand why they have done in this way. If you want to follow IC solution, you can follow that. Up to this, I and IC is same, but they have added 10,360 here only, and then they have converted this into, means they have done reconciliation in cash flow statement only. But reconciliation is a part of disclosure, correct now. But if you want to follow your ICS solution, you can follow your ICS solution. Okay, sir. Chalega? Yes, sir. Yes, sir. With this, we completed in day 7. I don't think so. You require any much more discussion. Just write down some question which you are supposed to do by your own. Okay. This question once practice question number 11, practice by your own. Okay. 12th we have done. This 16 once you do by your own. This 18 must do once practice. Same question can be again asked in exam, because already asked in exam. This is related to same thing whatever I have said now. Subsidiary company was acquired, but there is only one transaction. Okay. Must do. This 27 also once do by your own. 27 do by your own. 28 is a newly inserted question. This also you do by your own. This also I think there is some exchange loss. I think they have given. Foreign currency translation reserve is given. Just do it by your own. Okay, I think you will be able to understand. Okay, sir. Chapter is over from my point of view. We'll take a small break. After that, we'll do Ind AS 113. Okay, sir. Now, can we start once again, everyone? Are you all ready? Okay. Now, chalo. Coming to next chapter, India's 113 fair value measurement. I will say from examination point of view, if they ask MCQ question, so of course you need to know the concept. But if they are asking descriptive question, there are, I will say 6-7 questions they will ask from that only. In this chapter, though, they are not creating a new question till now. Understood now? They are asking the same question, whatever is given in ICS studymetry. If you do that much, more than enough. For MCQ, you need to know the concept also. So, what is the objective of this fair value measurement in DAS 113? To define fair value. What is the meaning of fair value? And to set a framework for measurement of fair value in a single IND-AS. Because you know that every IND-AS, whatever we have done till now, require measurement of fair value. Now, how to measure fair value is given in one single IND-AS and require disclosure about fair value measurement. Scope is what, just try to understand. Whenever we do measurement of assets and liability at fair value, if that is, there are 2 points: when to measure, how to measure. What is the date of measurement? That is given respective IND-AS. For example, IND-AS 103, we need to measure INA, NC, etc. So that is on the date of acquisition. That is given under IND-AS 103. When you do revaluation, the revaluation is done at what date? That is given under IND-AS 16. So that is as per respective IND-AS. IND-AS 113 is silent about that. How to measure? In that case also, if it is covered under respective IND-AS, then apply that respective IND-AS. For example, if I say IND-AS 102, the fair value of option is measured as per the requirement of IND-AS 102. So for that, IND-AS 113 is not applicable. For that, IND-AS 113 is not applicable. For example, if I say IND-AS 116, so ROU asset is measured and lease liability is measured as per the requirement of IND-AS 116. So for that, IND-AS 113 is not applicable. If it is not covered in the respective IND-AS, then IND-AS 113 is applicable. Understood? Some example has given that you read it. What is the meaning of fair value? Fair value means exit price. So what is the meaning of exit price? There are 2 types of price. One is known as entry price. One is known as exit price. Entry price means what price will be done? What price is for the purchase of the asset? Means suppose you have one mobile, correct? Now you want to know the fair value of that mobile. So if I say in that way, if the similar mobile is purchased today, what price I need to pay? That become the one of the fair value, but that is entry price. But if I say in this way, the similar asset is sold in the market today, at what price it will sold, that become exit price. So IND-AS 113 has given a clarification that fair value is exit price, it cannot be entry price. So it is an exit price that would be received to sell an asset, or that would be paid to transfer liability. So that would be received to sell an asset, or that would be paid to transfer liability in an orderly transaction between market participant at a measurement date under current market condition. Under current market condition means fair value is totally based on market condition. It is not based on entities condition. For example, when I say NRV, what is the difference between NRV and fair value? NRV is totally measured based on entities condition, entities restriction. But when I say fair value is not based on entities restriction. Fair value is based on market condition. Got this point? This is the difference between NRV and fair value. So NRV and fair value are 2 different terms. 2 different terms. Chalega? Yes, sir. So fair value is based on the market participant assumption rather to an entity specific condition or restriction. which is usually not affect the valuation of assets and liability. Means for the determination of fair value, entity specific restriction will not be considered. Only asset or liability specific restriction will be considered. Chalega? Yes, sir. Now coming to unit of account. Unit of account means what? Just try to understand. Whenever we do measurement, we want two things. What is the number multiplied by price? For example, number of share multiplied by price per share. So right now we are discussing about price. We are not discussing about number. Means whether unit of account will be single asset or group of asset, Ind AS 113 is not dealing with that. That will be dealt as per respective Ind AS. Are you getting? For example, if I am saying CGU, so can I say for CGU we calculate fair value based on group of assets and liability. But whenever this is individual asset, so we want based on individual asset, so that is decided by respective Ind AS. So unit of account for the asset liability shall be determined in accordance with the Ind AS that required or permit fair value measurement. That is not covered under Ind AS 113. Correct? Now coming to transaction, one thing we have understood that fair value measurement assumes that transaction to sell an asset or transfer liability take place in a market, and this market are of two types. Either it can be principal market or most advantageous market. However, first preference will be given to principal market. If principal market cannot be identified, then we need to identify most advantageous market. Means most advantageous market will be identified only in the absence of principal market. Means what we are saying, fair value measurement assume that the transaction to sell an asset or to transfer liability take place either in principal market or most advantageous market. So what is the meaning of principal market? Principal market is the market with highest volume with high level of activities. Means in that market where high level of transaction is done, that become principal market. Are you getting what I am saying? Yes, sir. And different entities may have different principal market. Different entity may have different principal market. For example, for my English recorded classes, my principal market is South India. North India is for my Hindi classes. So if I am saying what is the fair value for my English classes, I need to identify in my South India market. Got this point? So that become my principal market for my English classes. Are you able to follow me? But sometimes what happens? We are not able to identify which one is my principal market. Quite possible. In that case, we need to identify most advantageous market. Most advantageous market is the market that maximize the amount that would be received for which would be received when an entity sell an asset, or which will minimize the amount that would be paid when an entity transfer a liability. Means which maximize the amount to be received and minimize the amount to be paid. That become most advantageous market. Most advantageous market. It means now the question arises, when the principal market cannot be identified, how to identify most advantageous market? So they have given one clarification. Whenever we calculate fair value, so from market price, we should only deduct transportation cost. Means market price minus transportation cost is fair value. From that, will not deduct transaction cost. So what is the meaning of transportation cost and transaction cost? Transportation cost means the cost incurred to bring the asset in the relevant market. That become transportation cost. But transaction cost is related to the nature of asset. Means dismantling cost, removal cost, that become transaction cost. So transaction cost is not deducted to determine fair value. As we have done, just try to understand, when I say fair value less cost to sell, the cost to sell become transaction cost. So fair value means what? Only market price minus transportation cost. But when you calculate most advantageous price, you should deduct both transportation cost and transaction cost. So to identify most advantageous market, we should deduct both. But to find out fair value, we should deduct only what? Transportation cost. Have you understood this point? This is very, very important. One question of this nature can be asked in exam. Already have been asked in exam. Correct now. So how to determine the fair value? If the principal market is identified, determine fair value based on principal market. Then price receivable for asset in the receivable market, price receivable for the asset in the principal market, minus only transportation cost, that become fair value. But if principal market is not identified, first we need to identify most advantageous market. For that we need to find out most advantageous price. For example, market 1, market 2. So to find out most advantageous price, we should deduct both transportation cost and transaction cost. Suppose this is more than this, so market 2 become what? Most advantageous market. Now to find out a fair value based on market 2, now we'll deduct only transportation cost. To determine fair value based on most advantageous market, price receivable for asset in most advantageous market, less only transportation cost. I think thora you have understood. Let me take one question. With the question you will better understand. Correct? Come to question number 11. Already asked in exam, can be again asked in exam. Okay. Come to question number 11. What is given? An asset is sold in two different active market in different prices. Men are limited enter into transaction both market and can access the price in those market for the asset at measurement date. In Mumbai market, the price would be received 290. Transaction cost is 40. Transportation cost 30. So what is net amount? 290 minus 40 minus 30 is 220. In Kolkata market, 280, 20, 30 is given. Net is 230. What will be the fair value of asset? If Mumbai market is the principal market, can you see Mumbai market is principal market? So already principal market is known. Then your fair value is 290 minus transportation cost, that is 30. So 290 minus 30, 260 is fair value. Understood? Then second question, what should be the fair value if none of the market is principal market? Then in that case you need to first identify most advantageous market. You can see for that you need to find out the most advantageous price. For that you should deduct both. So we will compare 220 with 230 and 230 become most advantageous price, and therefore now Kolkata become most advantageous market. Now for Kolkata, if Kolkata is most advanced market, what is the fair value? Now fair value will be 280 minus 30, that is 250. 280 minus 30, that is 250. Understood? Have you understood this part? Any doubt? Have you understood this part? Yes, sir. Very good. There is one more question given. If the net realization after expense is more in export market, say 280, but government allow only 15% production to be exported in India, because the export market is not a principal market because it is not of high value. Therefore, in this case, fair value cannot be determined based on export market, even though it is what most advantageous. We need to find out domestic market. Domestic market become the principal market. Understood this part? Answer is given, you can read it. Chalega? Yes, sir. Done. Got this point? Yes, sir. Now let us come to next point. Now market participant, you can read. Market participant means buyer or seller in the principal or most advantage market for asset liability. Such market participants should be independent, should be knowledgeable, should be able or willing to enter into the transaction, should be not under any financial stress. Means whenever you are finding out market participant, the market participant should be those persons which are independent, which are not under financial stress, which have knowledge about the product and which want to enter into that transaction. Okay. Now coming to valuation techniques. Now valuation techniques, which valuation technique we should follow? So what India's Manvantri say that any valuation technique which maximize observable input and which minimize unobservable input is more appropriate. So what do you mean by observable input and unobservable input? Observable input means those information which can be directly taken from the market. Correct. So we should maximize observable information, and our price should be based on the observable information. But if you are not able to find out observable information, then your valuation technique should be based on unobservable information. Understood? The input data developed using market data, such as publicly available information about actual event or transaction, and that reflect the assumption the market participant would use when pricing the asset liability, that become observable information. Unobservable means what? Input for which market data are not available, and that are developed using the best information available about the assumption that market participant would use when pricing the asset liability. Understood? Now coming to valuation technique, there are three valuation techniques. One is known as market approach, second is known as cost approach, and third is known as income approach. Now income approach is totally based on unobservable information. Means whenever market approach and cost approach cannot be used, then we use income approach. Correct? Market approach is means based on observable information, means directly from the quoted market price. So first preference will be given to market approach, and last importance will be given to income approach. Income approach means what? Converting future amount into single present amount. Means either it is based on present value technique or option pricing model. Option pricing model, I hope you know about AFM, binomial pricing theorem, and Black and Scholes model, whatever you have done. That will not be asked in FR exam. Present value technique can be asked either converting present value of future cash flow or present value of future income. That will be based on the information given in the question. Chalega. Now these are so many questions given. We'll do one by one. But before that, I need to explain fair value hierarchy. Important. First is hierarchy means which information should be used first. First, level 1 input. Level 1 input means quoted price without any adjustment. Without any adjustment in an active market for identical asset or liability at measurement date. Identical asset or liability at measurement date. That is level 1 input. Level 2 input means what? Input other than quoted price with level 1 input that are observable for asset liability either directly or indirectly. Means it is other than quoted price, but is quoted price of similar company with some adjustment. Quoted price of similar company with some adjustment, that become level 2. Means quoted price of similar asset or liability in an active market, or quoted price of similar identical asset in an inactive market, or any other observable information. Means in this case now quoted price require adjustment because we take similar company information. In this case directly we take the quoted price of the relevant asset liability. Got this point? Level 1, level 2 input. Level 3 input means we use unobservable information, means we use income approach. Understood? Means whenever you are doing fair valuation, first you should ask one question: is quoted price of identical asset liability in an active market exist? If yes, then ask one more question: is the price require adjustment? If no, then it become level 1 input. But if the price require adjustment, or if the quoted price of identical asset liability in an active market does not exist, then ask one question: are there any significant unobservable input? If yes, then use level 3 input, income approach. If no, then use level 2 input, means quoted price of similar company with some adjustment. Level 3 means income approach. Understood? I think this diagram will help you in this flow chart. Understood? But CA enter by you asking is CA final. Okay? Chalega? This much you understood? Okay. With this, now we can take many questions, whatever has been given. This para you read just once, you will be able to understand. Can be important for theory questions. I hope you have understood. Now let us take some questions which can be asked in exam. One by one we'll take the questions. I think you can do most of the questions by your own. You don't require my help. In only one question you require my help. Question 5, you can see MTP, September, Jan, already asked in exam also. ABC acquired 5% equity shares of XYZ Limited for 10 crore in year 2011-12. The company is in the process of preparing financial statement for the year 12-13 and is assessing the fair value at subsequent measurement of investment made in XYZ Limited. Based on the observable input, ABC Limited identifies similar nature of transaction in which PQR acquired 20% equity shares of XYZ Limited for 60 crore. 20% equity shares of XYZ Limited. Now ABC already acquired 5% equity shares of XYZ Limited. The price of such transaction was determined on the basis of comparable company method. That is enterprise value divided by about EBITDA is earning before interest, tax, depreciation and amortization, which was 8. For the current year, EBITDA of XYZ is 40 crore. At the time of acquisition, the valuation was determined after considering 5% liquidity discount and 5% of NCI stake discount. NCI means you understood now, because whenever you acquire controlling interest, you need to pay control premium. So for NCI, we need to give some discount. What will be the fair value of ABC? You can say first to, because what is given what is given, they have already given to you EBITDA given 40 crore and what is given, correct. So you can see EBITDA on measurement is given 40 crore. One more information was given. Yeah. Can you say enterprise value EBITDA was 8, that is also given. So if that is given 8, so you can find out enterprise value. So enterprise value means what? Is equal to 320. So enterprise value of XYZ company is given 320. Now can you 320, if you give two discount, what are the two discount? 5%, 5%, two discount need to be given. Or first you can calculate 5% also. If 5% is the total number of equity acquired, to 5% of 320 is 16. From that you give 10% discount. So this becomes the fair value of ABC Limited in XYZ Limited. This is the answer. Super easy. Question number 6. UK Limited is in the process of acquisition of shares of PT Limited as a part of business reorganization. The projected free cash flow for the next 5 years is given. You can say cash flow has been given. Terminal value has been given. Terminal value means if you sell the business at the end of year 5, how much can be obtained? The weighted average cost of capital is 11%. Of course, you can find out present value. The total debt on measurement date is 1465. That will be deducted, and surplus cash and cash equivalent that will be added. The total number of shares given, this must divide. You will get what? Per share value. Means you can see first they have calculated present value. From that, deduct debt, add surplus cash. This becomes total enterprise value divided by number of equity shares. This is per share value. Very easy. Understood. Super easy. Same thing, question number 7. In this was also asked in one of the exam. In this, what they have given, they have calculated valuation as per market approach and as per income approach. Now they want to, this is given that equal weight will be given. It is given equal weight will be given to this. Then that obligation is given, surplus cash and cash equivalent given, fair value of surplus assets and liabilities given, number of shares given. So first you will find out EV value, taking weight 50%, 50%. So 50%, 50% will be 4251. This become enterprise value. From this minus debt obligation, then add surplus cash, then add surplus value of assets and liability. Then this become enterprise value of KK Limited after all adjustment, divided by number of shares. This become value per share. What is this question? Super easy. What I am doing, what I am teaching. Can you do it by your own? Only one question I am supposed to take. Do all the questions. One question will come. Only this question I am supposed to take, because in this one point I need to explain. Until now not asked in exam. Chalega? So I will take only one question, question 9. Balance all question do. Means this chapter is super easy from examination point of view, and they ask in exam. Correct now? They are asking from this chapter. So 4 marks if they are asking, and suppose you are not able to do it, the 4 marks gone. Okay? Yes, sir. On 1st Jan 2001, A Limited assumed a decommissioning liability in a business combination. The reporting entity is legally required to dismantle and remove an offshore oil platform at the end of its useful life, which is estimated to be 10 years. The following information is relevant. Okay, sir. If A Limited was contractually allowed to transfer its decommissioning liability to a market, with this information you read, then they have given some information, correct now, labor cost. Labor costs are developed based on current marketplace wages, adjusted for expectation of future wages increase, required to hire contractor to dismantle and remove offshore while platform. A Limited assigned probability to range of cash flow estimate. Now they have given cash flow estimate for labor cost. Probability is this. So this into this into this into this. You'll do. So you can find out labor cost. Expected labor cost you can find out very easy. Then allocation overhead cost. Assign 80% labor cost. 80% you can add. So overhead cost 80% of this you can add very easy. Then compensation that market participant require for undertaking the activities and for assuming the risk associated with the obligation to dismantle and remove the asset. Such compensation include both the following. Profit on labor and overhead cost. A profit markup of 20% is consistent with the rate. So 20% markup. So you can see they have increased profit markup on cash. 20% on the total of this. This will be added, and this is the total expected cash flow. Total expected cash flow. Understood? चलेगा. The risk that actual cash outflow might differ from those expected. This risk, what is the actual and expected, may be different. Excluding inflation, A Limited estimated the amount of that premium to be 5% of expected cash flow. So a risk of 5% of expected cash flow should be added. Then effect of inflation on estimated cost and profit. On estimated cost and profit, A Limited assume a rate of inflation of 4% over 10-year period based on the available market data. Means can I say inflation 4% over 10 years? So 4%, 4%, 4% we need to add. Now the question is that first we'll add inflation or first we'll add risk premium. What do you think? Here only doubt will come. First we should add inflation. First we should add risk premium. Only here doubt will come. If you have understood this, then the question is very easy. If you do not understand this and you do mistake here, question is complicated. So first you will add 5% or first you will consider inflation. No, just try to. A Limited estimate that amount that premium to be 5% of expected cash flow. Expected cash flow will be after inflation. First, though, you need to find out expected cash flow, and that will be after inflation. Right now, to when you have added this thing, this is based on present rate. So first add inflation, then premium. Understood? Yes, sir. So you can see what they have done. 283 came. Now they have first added inflation. This is inflation what? 4%, 4%, 4%, 10 times. Means it is 1.04 to the power 10. Huh? To the power 10. This is 1.4808. This multiply by this. So this will become inflated amount. Sorry, after inflation this amount. Now this will be increased by 5% premium. So 5% premium this is increased. This become what total expected cash flow. Now they have given time value of money is 5%, but risk free. But we need to use adjusted risk factor also 3.5%. So 8.5% become the discount rate. Now they have calculated discount rate at 8.5% for 10 years. Then calculate present value. This become the expected present value. Means this become your decommissioning liability fair value. Understood? Have you understood? Good question. Can you do other question by your own? Because solution is given, you can understand this all point by your own. My help is not required really, but I have taken some question to inform you that if you do this all the question whatever is given in my question bank, one question will come. We don't know which question will come. Any question can come. Thoda sa theoretical point is important for MCQ, that already I have discussed. All the point which is relevant for MCQs I have discussed. Chalega. Okay, understood. Ind AS 113 is also completed. From my point of view, only now 2 chapters are left. What are the chapters are left? Ind AS 101 and conceptual framework. So your entire FR practice batch will be completed. one cash flow statement, profit and loss account that I will discuss. Have you understood it or not? Bol. Understood? I think you have understood. So we are left with one class. Tomorrow I may or may not take the class. If I am taking, so I will update you. If I am not taking, so I will update you about that. Okay, so only one class is pending. Your syllabus is completed. Only 101 and one conceptual framework, 2 chapters are left. Balance all thing I have done. Okay, we will meet soon to complete the entire session. Thank you very much. Bye bye. Love you all. All the best. Jai Jirendra. Jai Hind. Bye bye. Love you all.